Hello, everyone. Welcome to the Nasdaq Dorsey Wright podcast for the week ending on December 13th, Friday the 13th.
Very spooky.
Very spooky. Yeah,
Also my birthday.
and also Miles' birthday. So, we got birthday boy Miles. He's sitting here and we're recording this on Thursday morning, but when the podcast comes out, it will be Miles' birthday. So, happy early birthday.
Thank you. All I want for my birthday is for markets to go up. Not that hard to, not that much to ask for, right?
It hasn't been, if your birthday was 60 other days this year, then it would have been pretty easy for that to happen because we've seen 60 new all-time highs in the S&P so
That
far
sounds
this
like a
year.
lot to me. How's
It,
that stand up historically?
it hasn't happened all that many times. There's been five times that we've seen 60 or more um, all-time highs in the S&P 500 dating back to was this through 1950?
Okay.
And when we're coming in, coming into this year, I don't think anyone would have guessed that we would have seen 60 all-time highs this year after a 20% plus gain last year.
Right.
And when we're looking at movement recently, we just continue to take higher. So maybe we'll get more all-time highs for your birthday
Fingers
there.
crossed, right?
But when we're looking at performance recently, we've gotten some of that all-time high stuff. But we're seeing the S&P 500 continue to take a little bit higher. The equal weighted S&P not taking as high as not taking as high recently, right?
Yeah, so over the last 1 week roll, since I think you and David were on chatting there, S&P 500 seen some more additional all-time highs, but it's pretty much flat over the last 7 days. The average stock S&P 500 equal weighted index down about 1.5%. So we have seen some breadth increases. We've talked about that over the last few months. That's going to be a big tailwind as we move into the new year. But at least in the near term, we have seen a little bit of divergence and some interesting relative strength developments there too. You want to touch on that now, or do you want to?
Yeah,
Okay.
no. So I
Yeah.
think that makes sense. You threw a piece in the report earlier that's looking at the comparing the on a relative strength perspective, the cap weighted S&P SPX
Right.
versus the equal weighted. So how is the broad cap weighted benchmark doing against the average stock in that in set index? And it's more improvement for the cap weighted, right?
Right. Yeah. So there's going to be some NDW jargon here, but we took a look on a 1% scale for SPX versus SPX EWY, and we can throw this chart up on the screen right now. And over the last week, we saw this chart, this specific chart, return back into X's in favor of SPX. So point being, we're seeing some near-term strength for the cap weighted index over the average stock equally weighted index there. Also on this chart, I will note we've been on two consecutive buy signals since May. So longer term preference, we typically talk about the signal that we're on as longer term preference. We've seen cap weighted names take the cake for the last, let's say, year and a half or so at this point. That kind of lines up with with what we've seen from a leadership perspective over the last few years or so.
Yeah, and it's a pretty consistent chart
It is.
historically. When you're looking at, and there's different ways to look at it. You can look like profitability if you take each of those signals, but just looking at, do you get consecutive signals? Like you do most of the time, right?
Right.
That's kind of what you want when you're looking at any relative strength comparison. I think that is the most important thing to keep in mind is you want signal consistency, or else the chart's not helpful,
Right.
right? If you get buy signals and sell signals flip flopping back and forth, it's like, well, what do you do when one happens? Do you do the opposite? That's not what the chart's for.
Yeah.
Right? You want to have the signals mean something, and these do.
Right. And I think this is also a good point to add in here that this is the power of relative strength. Ian and I are not coming in here and saying the average stock or the S&P 500 equal weighted index is dead, right? It's up about 20%.
Yeah.
In a comparison world, right? Relative strength can help us identify which one is stronger, maybe which one is relatively weaker. That doesn't mean that the equal weighted index is down. Actually, it's up quite notably, right?
Well, it wasn't up over the past week.
Well, that's true. But in terms of the last,
Yeah.
year to
Yeah.
date,
Yeah.
you take a look at it and say, hey, two things can be up. Relative strength, using it in my practice, helps me identify which one is up more,
Yeah.
right? And that's really key,
And I think that's an important thing to keep in mind when we look toward 2025.
right?
Because a very popular call this year is, okay, well, we've seen back-to-back 20% plus gains for the S&P 500. What hasn't been working? The equal weighted up until the last 6 weeks and small caps.
Right.
So it's a very popular thing to see, okay, we're going to see broadening out. We're going to see more breadth across the market. We're going to see the average stock, maybe the S&P 493 outperforms the Mag 7. Maybe small caps outperform large caps in 2025. Sure, like that very well might happen. We've seen that happen over the past few weeks, right? But we haven't seen kind of confirmation on that.
Right,
And
right.
using some of these charts can provide that confirmation. It's like, okay, if you got a call on it, you think this is going to happen. Well, let's kind of use some indications rather than just kind of going with the gut,
Right.
and see how it shakes out,
Right.
right? And when we're looking at it, throughout this year, we hit on it. earlier, but in looking at the S&P 500, I mean, you did not have a lot of calls for 20% gains in the S&P
No,
500
right.
in 2024. And so we've seen 60 new all-time highs. Like I said, that's only happened 5 other times since 1950 that we've seen 60 or more all-time highs in the S&P 500 in a calendar year. Forward performance from those, I mean, it's kind of, we looked at forward performance for the S&P, forward performance of the equal weight, forward performance for small caps. It's not great. It hasn't happened all that many times, though, I think is another pretty
3 times.
notable
Or
thing.
5 times, like you said,
Five
right?
times if it
More than
hits,
60.
yeah,
Okay.
more than 60 total. And if you get more than 70, so if we get 10 more all-time highs this year, I think well almost every single day would have to be a new all-time high at that point. I mean,
Possible.
the forward performance is pretty muted the
Right.
next year. It's just you just haven't seen that many times that this has
Right.
happened. So
It's
you
difficult
can't
to say,
really
right?
pull average historical performance when you're looking at like 5 instances in 50 or 75 years.
Yeah, no, that's an important point because a lot of these times when people are trying to make a call, they'll say, "Oh, using history," and we do it sometimes too.
100%, yeah.
But you have to take into account the data that you're looking at. When these sample sizes are very small, you have one bad year, suddenly the average plummets. Or same is true on the other side. If you have one good year, the average jumps quite notably. So again, as you're kind of wrapping up the year and looking at studies that are coming across your desk, make sure you're looking at how many samples or how big is the actual sample
Yeah,
size.
and with that many, I mean, Jamie put up, we had a piece in the report on Tuesday that kind of covered this. And I mean, the data is what the data is, but
Exactly.
he did have the couple sentences in there saying, but I think an interesting point to note and kind of like what you were hitting on, the the small sample size of it means that every instance impacts the data very significantly.
Right.
So you have some years were very negative for after kind of you get 6 year more all-time highs forward performance for the next year could be pretty bad. But then you had the late 90s where
Mhm.
6 year more all-time highs and you had blow-offs in the next year or two, right?
Right.
So it just depends. Hopefully we have another late 90s environment
Right.
kind of moving forward, but we'll just have to kind of see how that shakes out. One thing that's more we do have a lot of data for though, is Santa Claus rally, right?
Santa Claus rally.
Santa Claus rally is a very fun thing to talk about because it's pretty consistent thing to talk about.
Is that like after what Santa Claus gets too drunk off all the milk he has coming down the chimney?
Right, and that's why Rudolph has to fly the sleigh, right?
Something like
But no,
that.
the Santa Claus rally is historical kind of market adage in tendency for the S&P 500 to post more positive performance in the last week of a trade, last 7 days of a trading period between Christmas and New Year's.
Right.
It is essentially saying, hey, is Santa going to come and bring the rest of the bring the market gifts,
Right.
right?
Everyone's jolly.
Exactly, and there's a lot of reasons of why this could have happened in the past. Maybe it's just, hey, people are trying to, people are happy and not at their desks. Probably more of a reason is that people are trying to have their final catch-up trades heading into the year end
Right.
to get, especially in a year like this when you get the markets are up so much. People probably don't want to sell that much in the last few because you have some potential kind of career movement,
Right.
right? Not that much performance, but you have years like 2008, not like we're in a 2008 environment, but in 2008, you had a 7.45% return in the last 7 days of the year.
Talk about a Christmas
1974,
present, right?
7.2%. I mean, there have been years, only 4 years, 2008, 74, 73, and 1991, that saw a 5% plus gain in the last week of the year, last seven days of the year. Other years have seen pretty negative. Your 1999, your 1990, some weakness there. But by and large, on average, in any year, the S&P is positive 71% of the time in the last 7 days.
Which is quite notable. I mean,
Which
if you
is
think
good.
about it, 7 out of every 10 times, and if you look at that average return, and median is very similar, about 1%. And the average, if you're positive, so excluding those negative, let's say, what is that? Maybe eyeballing it like 12 or 13 instances of negative performance. You're up 2% over that week. So yeah, it's a pretty positive week, and for all the reasons that you said, I think I think it makes sense. Santa coming down the chimney, bringing a little bit more than presents to the kids.
Yeah.
Nice present to the portfolio as well.
I mean, it's always good to see, right? And I think there's it's like, okay, well, we're up 25+% this year. Are we really going to get another like 7 days? And of course, last year we did not see that carry over. The last 7 days last year we dropped 1%.
Right.
which is an important thing to know. We were up 20%. We were beating the drum on this again, being like, oh, we're typically going to be positive in the last week of the year. We weren't. Doesn't happen every time.
Right.
But in years when the S&P posts a 10% or more return, we actually see the percent positive go up for that last 7 days. So
Right.
kind
People
of
are
maybe
happier
like that,
already. Right.
kind of like a little bit. I mean, how much are you going to catch up over the last week of the year?
Right.
But I think that does kind of play into it a little bit as well. I mean, you're not trying to you're going to be the guy that sells out 7 days in. I mean, who knows,
It's
right?
possible.
That apparently is what happened last year. But
Did you say the percent positive
did
for
not.
those years? Okay.
85 previous leaving people on their toes. 85% of the time, if the S&P 500 is up 10% or more in a calendar year, the Santa Claus rally is positive 85% of the time.
Right. Higher than that for those doing math at home.
Right.
That's higher than just any regular Santa Claus rally. So that would give some credence to, hey, maybe at least historical batting averages, sans last year and a couple of other years in there. End of 2024 could be nice.
Could be. And we've seen some others. I mean, just the 85%. I
Right.
think in looking at, we did a lot of work around the election. So
Mhm.
looking at the fourth quarter performance of election years, positive 85% of the time.
Right.
Going to be positive this time too. We'll see what happens over the next few days. Hopefully, I didn't jinx it there. That would be a pretty rough birthday for you tomorrow. But 85%, I mean, just happens to be around the same kind of percentage,
Right.
I believe, if I'm remembering that correctly. We'll see what shakes out this year, but I think that's another potentially important thing to note as we're looking toward the last week of this year and into 2025.
Yeah.
And one other thing I did want to hit on too. I mean, there's seen some indicator changes. We've seen some stock movement. We talked a lot last week about sector rotation, about how we see improvement from communication services, not necessarily weakness from technology, but some weakness from some specific areas in
Mhm.
technology. Do want to note, I mean, communication services did tick up again, so we saw communication services jump to the second ranked spot in our broad sector rankings. Technology, interestingly enough, moved higher as well. It really industrials fell out of bed a little bit. Technology now is back in the third, so it's kind of like we were talking last week about both areas showing improvement. Just communication services showing a lot more improvement came to fruition over the past week. Interesting to note. But an interesting point to hit on, though, is when we see movement from a sector perspective, the natural inclination would be to go and buy whatever's shown the most recent improvement. And
Mhm.
I think an important thing to note is when we're looking at our models, it's not what they're going to do. Our
Right.
models are going to buy whatever the best ranked thing is that we don't already own.
Mhm.
And when we're seeing some sector rotation approaches, if we see weakness in some specific areas like semiconductors, if we continue to show some weakness coming out of some models, it's not buying comm services or utilities or whatever's jumped up a lot in the past 2 weeks. It's buying whatever's ranked at the top. And what's ranked at the top is by and large financials. It's number one in our Dolly sector rankings. It's sitting a lot at the top of a lot of matrices. And so I think that's just an important thing to note when we're looking at idea representation. Sometimes that number one ranked thing, if it's just stayed up there for a while, can kind of get forgotten
Right. Oh yeah.
when
Not
you're
even
looking
fly
at
under the radar.
representation, right?
Yeah, I think to summarize that, the idea is that you want to have a strategy that's robust enough that it isn't going to fall for, let's just say, flashes in the pan. And I'm not saying that utilities increases or communication services increases were flashes in the
Or
pan.
are or will be,
Yeah,
yeah.
or exactly. But the idea is that the models and the strategies that that we run, they're gonna use their methodology, use that kind of underlying relative strength tone to find those areas that have the longest term strength. In a lot of these cases, because technology has been strong for so long, we've got, overweights towards technology. As that rotates out, there hasn't been
Or
really
just
an
portions
opportunity.
of it rotate out, right?
Exactly. Yeah, smaller portions of it. Good clarification there. But as portions of that rotate out, we haven't had that many trades in a lot of these places. Financials has been the longer standing area. So that would be some credence for rotation into financials rather than these areas that have picked up.
Yeah.
So
And
anyway,
there are some good looking financial areas out there. Like looking
yes.
at the regional banks, KRE, the Spider S&P regional banking ETF there. I mean, very strong 5.5 fund score, a good looking chart.
Yep.
I
Nice
mean,
pullback.
oh yeah, you're getting 4 consecutive buy signals, breaking out to those highs at 70 back in November, and now you're getting a pullback just above the midpoint on its trading band. Um, you still got a little bit of a ways to go before you get down to that initial support level coming in at 54. Maybe some semblance of prior resistance becoming some support around the 59 level, which is
Yep.
interestingly just beneath that midpoint on its trading band.
Also, very similar picture. You and I were talking about it before we started recording to that previous pullback for August, right? We saw 50, a nice even round number, acting as really significant, stiff, older resistance. You kind of get a pullback to that point and then move higher from there. You see 60 then act as a point of kind of resistance at that point. You move higher to 70. Right now we're pulling back. Seems like, history doesn't often repeat, but it does sometimes rhyme.
Yeah, I mean, what is that? We talk about consistency in charts. I mean, the banking throughout the past year is seemed to see pop up, consolidation, pop up. We'll see if we get some consolidation or
Right.
further improvement from here. I think that'll be interesting area to notice. But as we head into 2025, financials is the number one ranked area in our broad sector rankings and has been for longer than the past couple months, right? I mean, it's been up there for a little bit. And regional banking, I mean, is pretty interesting area that could would going to be one of monitors as we move into next year.
Yeah, and there's some, obviously regional banking that's going to have some small cap implications as well. So, that's
Right.
also a good regional bank, not only good for the financial sector, but of course good for small caps in general, which is an area that we're looking to continue to broaden out the participation as we move into 2025.
Yeah, yeah, and if we get further rate decreases from the Fed, right, you would expect that to help out the regional banks a little bit more than maybe some of the bigger ones.
Right.
So I mean that'll be another important thing to monitor. I think we're at 85% chance that we get another
Yep.
25
That was, I
basis
think it
point
jumped
cut.
up to almost 98%.
That's when
I
it gets
saw.
scary, isn't it?
Yeah.
98%. I don't know. We'll see what happens over the next couple weeks. But yeah, there's going to be a lot to monitor as we move into next year. We'll have some broader kind of year-end wrap-up stuff, podcast coming out before the end of the year. But anything else you want to hit on?
No.
Cool. We got to get out of here, get ready, get you out of here so we can have your birthday celebration tonight. So.
All right. I don't know what that is, but I'm looking forward to it. Hey, listen, y'all, it was an absolute pleasure, and we'll be back again next week to touch on any updates that occur over the next 7 days. Have a good one.